worth of Bitcoin out there, owned in the more traditional way, with hot wallets and cold storage. We think these ETFs make it so much easier for normal investors to access these products and get something to track the price of Bitcoin. But here's the benefit. They can now hold it in a securities account. And at some point very soon, these ETFs are going to have listed options on them, which allows us to do our work. Whether it's single stock positions or indexes or now spot Bitcoin ETFs, our focus is helping folks hedge those existing positions in their brokerage account, in an advisory account, helping to manage the risk in a customized way. Options on Bitcoin ETFs are going to be the gateway to doing that. Interestingly, not only on the ETFs that people own, but there are ways to do it on the Bitcoin they own elsewhere and do that from their securities account.
Gotta say, Dave, one of the things we love to ask, it's a simple question: why are you doing this? And we're just curious if your clients and the investors or the clients that you guys help have been asking for something like this.
100%. Everything we do is really driven by client demand. We hold ourselves out to be able to do our best to help clients hedge, whatever they own in the public security space. So we've gotten a lot of asks about this over the years and haven't been able to do anything. Obviously, trading Bitcoin or unlisted Bitcoin options isn't something that's readily available in your brokerage or advisory account. So the proliferation of these spot ETFs, and we've been in contact with SIBO, who's working with regulators to get the options on those spot ETFs available. That's new, and that is going to open the door to being able to help folks hedge. Obviously, a highly volatile instrument. Some folks enjoy that for trading. A lot of people have just made a lot of money in it, and just like you'd want to hedge anything where you had significant gains but don't necessarily want to sell and pay taxes on it, that's where our business comes in to help folks hedge, and we're really excited to be able to do that with relation to Bitcoin now.
When do you think you'll be able to actually do that? Like, what's the ETA?
Last date I heard is that there's some regulatory going on in mid-March, so it could be by the end of Q1. But we're basically just waiting to get those options listed, make sure that there's enough liquidity available, and we'll be ready to go to work.
I just want to say, when it comes to regulators and cryptocurrency, specifically Bitcoin, it's been a waiting game, Dave. So are you being realistic, do you think, in those expectations?
Unequivocally, it has been a waiting game. I think, the decision that was made to allow the spot Bitcoin ETF was sort of the biggest decision that had to be made. I have heard nothing from the exchanges we're speaking with that make it sound like it's going to be anywhere near as protracted a time period for the options as that was.
So I am also curious how the strategy is actually going to work, and in terms of mitigating the volatility that we have seen with the spot Bitcoin over the last couple of years. So how does it work specifically?
Sure. I think the most sort of typical approach to reducing risk for a client is just simply a costless collar. In this strategy, it's pretty straightforward. We want to buy protection, buy insurance against a decline in the price. So we're buying a put option on that spot Bitcoin ETF. That put is probably going to be reasonably expensive, especially given the vol in Bitcoin, and therefore we need to pay for it somehow. We don't typically advise folks paying for it with cash. We'd rather pay for it with sort of foregone potential upside, and that's by selling a call. So your collar is buy a put, sell a call, and do that in a way that is sort of slightly net positive from a cash flow perspective. You can take up to 70% of your risk off the table without selling any. And so that's a move we do for a lot of folks with concentrated stock positions today. We don't view Bitcoin ETFs any differently.
What would you anticipate in terms of kind of a typical return then off of this kind of investment? Because obviously for those who are looking to play the swings, they're not going to have that advantage to the upside, but they're also going to be immune from most of the downside as well in terms of the swings that we see on spot Bitcoin. So what kind of returns are you thinking about off of this strategy?
I'd really redirect that to thinking about what kind of volatility reduction are we going to see. And again, that's typically taken up to 70% off. For the tactical folks who enjoy trading it, it is a tool you can use to mitigate risk for a time period without selling, and then take it off to sort of reestablish your overall position and participate in the upside. But for other folks where it's been such a long-term winner for them, this might just be a way to take chips off the table without having to pay taxes.
All right, I get it, because when you said you've got kind of a high fee on it, I was just trying to kind of figure out in terms of what we could expect in terms of returns off of it.
Hey, Dave, I want to take a step back and just talk a little bit about SpiderRock Advisors, because on your website, you do say that derivatives have a place in almost all portfolios, with volatility as an asset class serving as a core holding. I'll be honest, it's not something that we talk about a lot when it comes to an individual's portfolio. And I don't think a lot of people have derivatives apart from, ETFs in their portfolios. So why do you think derivatives have a place in everyone's portfolio?
Especially for the taxable investor, listed options can help in a number of ways. It's really the only way to change your risk profile without having to sell your existing underlying holdings, which of course triggers a tax bill, permanent drag on performance. So reshaping risk, whether it's through too much risk in single names that you've owned that have had great rallies, a few stories on those even this week, to just lowering your overall beta exposure, to creating additional cash flows through call selling or put selling. There are all kinds of different tools you've got available with the listed option market with respect to a typical wealth management portfolio, stocks, bonds, funds. And through our technology and our business, our goal is to bring a lot of customization to that and help folks achieve the changes they want to make in their portfolio using options, because they're the only way you can deliver some of these solutions. Maximizing after tax is the real goal.
No, it's an important aspect, certainly, of this strategy. Hey, Dave, excuse me. Thank you so much. Really appreciate it. Dave Donnelly, he's managing director at SpiderRock Advisors, as we said, a Chicago-based asset management firm, and they've got about $4.5 billion in assets under management. But this makes sense, like coming off of the spot Bitcoin ETFs that we've seen approved. Like everybody's trying to figure out the strategies off of it, and minimizing volatility through options obviously makes a lot of sense.
Yeah,
or it's going to be certainly something that we knew was coming.
Have to wait for those regulators to give the nod of approval.
Yeah, absolutely, not yet, but you would assume that, right? They're going to allow for kind of an expansion of some of these trading strategies.
Hey, we got a mixed market heading into the close, just less than a half hour away. The Nasdaq lower, but the S&P 500 is higher. Let's go to Washington D.C. now for a check the latest world and national news with Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Tim. Tomorrow marks 2 years since Russia's invasion of Ukraine. Today, the U.S. is rolling out sweeping sanctions on more than 500 people and entities tied to the Kremlin's war machine. President Biden spoke about it during a speech today to the National Governors Association.
We in the United States are going to continue to ensure that Putin pays the price for his aggression abroad and repression at home.
Biden again urged Congress to address the foreign aid package that's already passed the Senate. As for the sanctions, Treasury Secretary Wally Adeyemo joined us to provide some details.
The key thing that we're doing today is we're sanctioning a number of companies you've never heard of that Russia has set up to try and buy things from India and other countries. And by sanctioning those companies, we put them on the radar of companies in India and in countries around the world, and they know that they can no longer do business with them.
Deputy Treasury Secretary Wally Adeyemo was a guest on Bloomberg Surveillance. Former President Trump is weighing in on the debate surrounding Alabama's Supreme Court ruling that said frozen embryos can be considered children under state law. It's prompted hospitals to stop providing in vitro fertilization procedures. Well, Trump says in a Truth Social post he would strongly support the availability of IVF treatments and called on Alabama lawmakers to preserve access to the procedure. Tomorrow's a big day for Republican voters in South Carolina. They'll be choosing between Donald Trump and Nikki Haley, the state's former governor. Oakley Dixon admits he's still mulling over who will receive his vote.
It's a toss between the two, because I think they both did great things for our state, but leaning which way I'm going to go, I haven't decided yet.
Haley and her backers have blanketed the state with commercials this month, spending $6.4 million, about 15 times what the Trump campaign has spent. But despite all that, Haley still trails Trump in recent polls. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P pushing higher. Could see a record close. We've got NASDAQ at 16,000. Dow Jones Industrial Average also looking at a record as we wrap up a holiday-shortened trading week. What a week it has been. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed right now, with the Dow currently higher by 93 points. S&Ps are higher by 5, while NASDAQ is lower by 40. The U.S. 10-year yield is at 4.26%. Gold is up 12. Oil trading in the red, but Bitcoin is lower by 1.2%. Among the main 11 S&P sectors, leaders were utilities and consumer staples. Energy and consumer discretionary were in the red, and leaders to the upside in the Dow, Amgen and Walgreens, while Apple and Travelers led to the downside. After earnings, Carvana rose as much as 46%. Block jumped 17%. And wrapping things up, NVIDIA topped $800 a share before pairing gains. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
TikTok, everybody. 18 minutes left
You
in today's
can go
trading
ahead and
session.
say
I
that.
know, I'm not a good rounder. We're definitely off our best levels of the session. As you heard Charlie break it down, slight gains on the S&P and Dow, NASDAQ lower. Feel like a little bit of a break, a pause, if you will, from the NVIDIA rally that was yesterday. But S&P, what? We're still at a record, right? Doesn't matter what it moves.
We just got to be in the green. And Carol, we're in the green right now.
Up 5 points.
Exactly. Hey, let's see what Katerina Simonetti has to say about this. She's Senior Vice President and Private Wealth Advisor at Morgan Stanley Private Wealth Management. She joins us on Zoom from Philadelphia. Katerina, how are you?
Thank you for having me on the show.
Yeah, it's good.
It's good to be here on the Friday.
It's good to have you back with us. What a week it was. Help us make sense of the gain that we've seen in the S&P 500 so far this year, in the NASDAQ so far this year, when, we're talking already up 6.6% in the NASDAQ, 6.8% in the S&P 500. What's left for the year?
Well, what an incredible start of the year. And when you kind of think about the transition that we finished 2023 with this focus on what Fed is going to do, and then we went into January with this wide expectation that we're going to have, 5 rate cuts. And what we're seeing now are these earnings surprises, and they're not just surprises across the board. They're surprises specifically in the names, the magnificent 7 names that have done so well. So now it's going to be progressively difficult for the Fed to be very aggressive with rate cuts, and consensus now is that we're going to have about 3 of them. And the focus for investors is really on these fast-moving stocks. And what we're seeing as the biggest trap to try to avoid is when investors are starting to doubt their diversified portfolios, starting to doubt asset allocation, and are kind of saying, like, should we stay with blue chip stocks? Should we stay diversified? Or should we switch direction into this highest growing stocks? And that's what, these are the type of conversations that we're having, at the beginning of this year.
Well, having said that, we kicked off earlier with our Gina Martin Adams, our chief equity strategist here at Bloomberg Intelligence, and she said, with all of the interest and mania surrounding NVIDIA and our obsession with technology, that she said more stocks in industrials and financials made more highs than tech over, I think she said, the past week or so, which was kind of interesting. And that's why she said she was finding it constructive for investors to look specifically at those spaces. How are you seeing it? Could you drill down a little bit more specifically in terms of where you think, not just a broadening out, where investors should be maybe adding some more in terms of asset allocation?
Absolutely. And I want to be clear that we are not advocating giving up on tech, because tech is playing an absolutely instrumental role in the growth of the sectors like industrials and financials and healthcare. And we are seeing some of these companies is all across the sectors, making significant investments in AI, in increasing profitability, in cutting costs, and technology is going to play an absolutely essential role there. So technology should be in the portfolios, but we're seeing the other sectors like financials, industrials, with this, huge government spending in that space, with healthcare. We have aging population, and the need for healthcare services is becoming more and more. I mean, there are exciting developments with genomics and biotech. So we see the opportunities across the board. We're advocating looking at valuations. What we are cautioning investors not to do is when we are looking at earnings, and especially the earnings that are so exciting and are looking, very good, the question is, how sustainable are they? And there is no such thing as growth in perpetuity, right? So the reason that we diversify.
And yet, don't you feel like constantly there's a pushback against the Magnificent Seven, those growth names, and yet here we are year after year focusing on them and talking about them, and they continue to lead the market gains?
Absolutely. So I think the real question we should be asking is, what should we do about it? And investors that don't own those names and really want to own them, there is no, we're not telling them don't own them. The question is how much. What we are cautioning them from is abandoning healthcare and financials and industrials, instead of just going and focusing and concentrating in these individual names, but taking a reasonable position, because you want to be part of that AI story and want to be part of that growth, and you don't want to feel like you're missing out. That's perfectly acceptable. That makes sense.
So I guess the question I have is really about the macro environment, and it does, politics notwithstanding here and the election notwithstanding here in the U.S., what kind of derails the path that we're on right now? Because it does seem like so many economic signs that we're getting, so much of the data, it's seeming pretty good.
Absolutely, and I think that, Tim, the economic data that we need to look at more than at any other area is the labor market, because the data that we're seeing from the labor market is extremely mixed. On one side, we have full employment, we're seeing high wages, but we're also seeing this waves of layoffs, or the cost-cutting projections that include the possibility of the layoffs. And as of right now, the consumer confidence and willingness of consumers to spend and their optimism about the market is something that is playing a very big role. It's this huge the tailwind, for the growth of the economy. But if we're going to start seeing this shift and the change in the labor market, that is something that is going to be pretty pivotal, with the slowdown of the economy, and something that Fed is paying a very close attention to when it comes to the decision on the timing with the amount of rate cuts.
Carol, this is exactly what Gina Martin-Adams said earlier today. Watch the labor market. It just doesn't seem like we're getting any signals that there's weakness there, except for, and this is kind of ironic, the tech industry layoffs that we've seen over the past 6 weeks.
And she said if we do start to see overall the labor market start to roll over, and that the Fed does feel like it needs to cut rates sooner rather than later, I mean, that could be problematic, that the economy is slowing down, and that ultimately will lead to slower earnings growth. Like, it all relates back. And then you have to start rethinking about valuations on the equity side of things, potentially. Potentially. Okay. All right. Katerina, thank you so much. Really appreciate it. Have a great weekend. Katerina Simonetti, she's Senior Vice President and Private Wealth Advisor at Morgan Stanley Private Wealth Management, joining us from Philadelphia on a day when we are getting ready to wrap up quite a week here. And we're looking at a market that I would say is just kind of a little bit mellow heading into the weekend, but we're still up about 8 points on the S&P 500. If so, as you mentioned earlier, any gain on the S&P 500 today would be another record. Same story for the Dow, which is up 121 points now. NASDAQ a little bit lower, down about 0.2%. So we'll see how that all ends up.
Okay, so we're done with 90% of earnings so far. We still got a few more in the coming weeks.
But this week reminding you that, hey, folks, we're near the tail end, but there are still big ones.
But there's stuff to watch next week. Our own Anna Wong at Bloomberg Economics says, keep an eye on the government shutdown or not. Which should probably be on a lot of people's radar.
We forget about that, right?
Yeah.
Rearing its ugly head.
At least this week. It just happens over and over again. I think that's why investors are numb to it.
Are they even at work? Aren't they away?
No, of course they're not, Carol.
Next time I don't finish something and I just say, hey, I got to take my week off. Sorry, guys.
2 weeks.
Ain't going to happen. All right, stick around. We're going to count you down to the close shortly. This is Bloomberg.
your company news headlines on Bloomberg Radio. From Bloomberg World Headquarters, I'm Charlie Pellet. Heads up for frequent flyers. United Airlines is joining American and JetBlue in raising those checked bag fees. United becomes the latest American carrier to issue fees for checked bags as the industry faces inflationary pressures for labor and other rising expenses. Now, the cost for North American passengers to check their first bag will go up $5 for $40 for all tickets purchased on or after February 24th. Intuitive Machines, ticker LUNR, Lunar, soaring today after a lander from the commercial space startup touched down on the moon yesterday, making it the first private spacecraft to land on the lunar surface intact. Right now, shares of Intuitive Machines up by 16.8%. Some of the other stories we're following for you today, we've got Reddit ready to go public. The San Francisco-based social media platform filed for an IPO more than 2 years after submitting its plan confidentially. Bloomberg News has reported that Reddit has been advised to consider a valuation of at least $5 billion and could begin marketing its shares as soon as next month. DraftKings shares, they are pushing higher, up by 1% right now after Barclays raised its rating on the shares to overweight from equal weight, saying the total addressable market for online sports betting and iGaming in North America is likely higher than previously expected. Again, DraftKings up now by just about 1%. And EOG Resources shares, they're down 4% as the oil producer's fourth quarter results missed expectations. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg. You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Carol Masser live from the Bloomberg Interactive Brokers studio. February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 23rd, here's Bloomberg's Justin Milliner.
Thank you very much, Tim. On this day in Black history in 1979, Frank E. Peterson Jr. was named the first black general in the U.S. Marine Corps. His impressive service career began in 1950 when Peterson enlisted in the U.S. Navy. Peterson was inspired to join because of the Korean War, and he was also inspired by Jesse L. Brown, the first black aviator in the Navy. Peterson entered the Naval Aviation Cadet Program in 1951, completed flight training, and went on to serve combat tours in the Korean and Vietnam Wars. He would fly over 300 combat missions, notching over 4,000 hours in flight. He was the first black person to command a fighter squadron, an air wing, an air fighter group, and a major base. His work earned him accolades in both the Navy and the Marines, including the Marine Aviation designation of Silver Hawk and the Naval designation of Gray Eagle. This all led to him being a great choice when he was promoted to general in the U.S. Marine Corps in 1979. And that is today in Black history. Carol and Tim.
Yeah, pretty impressive. And it was interesting to see the first general, but it was 1979, almost 1980. So it's only, 40-something years ago.
Yeah.
Again, we talk about this a lot, right? It's like in our lifetimes, maybe not your lifetime.
It did make the cut for my lifetime, but it's not that far back before me. And that is something that is a recurring theme when doing this project is seeing how much recent history there's been made, and still history that's being made
as we speak.
Well, that's what I was just going to say. I mean, it's not just a first, but after first, there has to be a point where we get to proportional.
Right, exactly.
And we're not even close in so many things here.
No. As a matter of fact, I was thinking, you both did an interview recently with the president of TV1. I think her name was Michelle Rice. Yeah. Just under 5% of black women are in the C-suite right now. I think that was the statistic. And that just goes to show you how, every time a black woman enters the C-suite at a major company,
it's news.
That's news, and that's probably not good, the fact that we're still there.
I look forward to when all of this is the norm, and we're not.
Right.
Well, you talk about that all the time, when this is not news.
Right. And we're like, yeah, this is the norm.
Yeah.
Great stuff as always, Justin. Thank you so much. All right, time back to the markets. Head over to our TV colleagues, folks. We've got to wrap up the week and the day. Beyond the Bell starts right now.
Beyond
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Sonali Basak. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with our friends Carol Massar and Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, as well as our partnership with YouTube here. A bit of a holding pattern in the markets right now, Carol Massar, but still a relatively strong week on the back of yesterday's relatively strong rally.
Yeah.
Relatively is a good way to put it.
Absolutely, right? And fair enough to take a little bit of a breather here. And I keep thinking about the outlook, what shapes it? And I was thinking of a story that's on the Bloomberg about how economists are dropping their odds of a U.S. recession. And I do think about if we indeed do not see any kind of recession, get that soft landing, what that will mean for corporate earnings growth and estimates and providing more support to the equity
When you say
trade.
dropping the odds, what does that mean? They're going from like 52% to like 51?
Expanding at they see the economy now expanding at 2.1% annualized rate this year, up from the 1.5% expected last month. So that's good, more momentum.
But maybe it's also telling that we're just not even hearing people talk about it who are, business executives, people who are market observers who would come on our program. It's not even on their radar anymore like it was a year ago.
And I should say they're marking down their recession odds to 40%. That's the lowest since 2022, Sonali.
It's interesting. It's not just the recession odds that people are getting more optimistic about being marked down. It's the stock market and it's the bond market. The issuance we've seen, I know this is an equity market close, but just the amount of large cap stocks that have issued an enormous amount of bonds in this interest rate environment should tell you that you see bullishness across asset classes over here.
All right, we are getting the closing bells here on this Friday afternoon. A mixed day for the market, but a decidedly up week to be sure. A Dow Jones Industrial Average looks like it's going to close out the day up. Pardon my French there, up 62 points or about 0.1% here on the day. On the week, though, it's also holding on to about a 1% gain. The S&P 500 is going to finish the day higher by about 2 points, right around that 5,088 level as we wait for these numbers to settle. At one point on the day, it did trade above 5,100. The NASDAQ did move lower on the day, down about 45 points or about 0.3%, while the Russell 2000, modest gains on the day, 0.1%.
All right. Wait, go ahead. What?
I wanted to talk about sectors as well here for a minute here because we did have a few that were down on the day, but nothing too crazy here, Carol. We had energy down about 0.5% on the day and consumer discretionary as well. But utilities, materials, and industrials leading the way here. So you did see some more participation in the S&P 500 that was marginally higher, finally to close the day.
All right, folks, let's get to, those were the sectors, so let's drill down a little bit more and get to some of the individual gainers in today's session. I'd be remiss if I didn't bring NVIDIA into the mix once again.
Did that rally today?
Well, it did at one point. It was up about 5%, finishing the day with a 0.4% gain. So that's, I believe, good enough for a record again.
If it's green, it's in the record.
Okay, all right, we'll take it.
Wait, where did we settle? Let me just pull it up here. 1.97 trillion.
Yeah, we were on that $2 trillion market cap watch. Not quite going to get there today, but I mean, it seems inevitable at this point, Carol.
Well, what's interesting, it was definitely a different kind of week for NVIDIA versus Palo Alto. Remember, it got hammered earlier in the week. Well, Palo Alto is your #1 gainer in the S&P 500, top gainer in the NASDAQ 100 as well. Heavier volume based on the past 20 days. So we did see a move up in that name, up more than 5%. Didn't see any real news. There was a big block trade that we did see come across the terminal. So I just thought it was interesting that we did see investors coming in.
That's just dip buying, right? I mean, that's sell-off early in the week. I mean, I understand what the concern was, but that was overdone.
But I agree, right? It's not like the stock is coming undone or the company's coming undone. It was just kind of a bit of a valuation reset.
Yeah.
Got to mention Carvana. This one.
Do we?
Let's pull it up. Well, come on.
Are they still around? What's going on?
32%. It was up more than 41% at its highs today.
Okay.
Biggest gain in about 2 years. The online used car dealers, fourth quarter adjusted EBITDA and EBITDA margin and gross profit all beat the average analyst estimate. They've been reworking their business. Obviously, investors, some enthusiasm. Big run up in last year's trade. So we continue to see some investor momentum.
Up
Even if you do not buy it.
last year.
I know, I kind of
1,000%.
played it down.
But look, there were questions about whether this was going to be a going concern the year before. So.
I also think there was a decent, I got to pull it up, but I think there was a decent short position on this one so that when they came in better than expected, it's a 32% percentage of float, outstanding shares that are being
Look at all that red next to you, Carol.
What?
The decliners.
Just because you weren't here yesterday and you're trying to cram in extra.
Was there a show yesterday? Oh.
It was a great show, by the way.
I'm going to get us back on track and talk about what was happening on the other end of the S&P 500. The biggest decliner in the index today, Booking Holdings. We covered the earnings yesterday after the close. Fell the most in 20 months. Shares falling today by more than 10%. This after the company gave a disappointing forecast for travel reservations and gross bookings. We noted this all day, the war in Israel and currency fluctuations weighing on results. For the full year, the company expects gross bookings to increase slightly faster than 7%.
Did they really blame the war in Israel?
Yeah, they did. They said it would not. It knocked like a couple percentage points off.
Oh, really? In part.
Yeah, I mean, look, it does. This company has a much bigger footprint in Europe than its competitors.
Right. Yeah.
Yeah. So,
good point.
Yeah, worth keeping an eye there. Warner Brothers Discovery, the second worst performer in the S&P 500 on a percentage basis today, hit an all-time low. The company reported fourth quarter revenue and profits that fell short of Wall Street forecasts and declining TV ad sales. Also, weakness in its studio business. Here's what David Zaslav said on the earnings call: "The business is not without its challenges. Among them, we continue to face the impacts of ongoing disruption in the pay TV ecosystem and a dislocated linear advertising ecosystem. We challenge our leaders to find innovative solutions." Curious to see what those solutions are going to be, given all the disruption that's happened in the space over the last few years. Finally, Rivian, another day of selling when it comes to Rivian shares, down more than 12% today. This after it fell 25% yesterday. Shares down close to 40% so far this week, all after that disappointing forecast for 2024 production, and also announced that 10% reduction to its workforce. This all happened late Wednesday.
All right, let's take a quick look at yields here. We did see some oscillations there, though the volatility that has typically been sort of indicative of this market tamped down just a little bit. Going to close out the week on the two-year yield just below 4.7, not far off from where we were to start the week. Down, we should say right now you're looking at the yields in that move that we saw, only about 2 basis points on the shorter end of the curve. But when you go further out, you saw a lot more activity there. 7 basis points lower on your 10-year yield and about 8 basis points lower on your 30-year yield on the day here. So you get a better sense here of where investors' heads are at, a little bit less about the reaction function of the Fed and a little bit more in tune here to, I think, what we were talking about a little bit earlier, and that's a revision of economic expectations.
All right, we have to talk about the week that was in the role of NVIDIA. Having said that, you know how I like to do this. What do you think was the best performing name in the S&P 500 this past week?
It was Garmin, wasn't it?
No, Discover Financial.
Oh, okay.
NVIDIA was the fifth best
That was so
performing stock.
Tuesday.
That was so Tuesday. But it's interesting, even though with the bump up, remember, NVIDIA leading into that earnings report, we saw, 4 consecutive down days. So there was some negative sentiment leading into it. And then, of course, that blockbuster report. But I do think about NVIDIA and how we were talking with our Tom Giles, who covers the Bloomberg technology team, and just the impact of AI more broadly, certainly machine learning and how it could impact so many different industries. But then we got that story of that incredible tie-up of some really well-known individuals. What was it, Amazon, it was NVIDIA, and some others in terms of AI and robotics, which I feel like we haven't talked a lot about, but the possibility of what it could do in terms of our society.
I was out at a supply chain conference a couple weeks ago, and one of the things that was really showing off there were these sort of animatronic kind of robots that could lift boxes, unload a container, and things like that. It was amazing how many folks were showing off those, both the big companies, the ones you would expect, like a Boston Dynamics, but also, of course, names like Figure AI and some of those smaller companies as well.
Yeah, and Figure AI is the one we're talking about because we had the story this afternoon that Bezos and NVIDIA are investing in the company to the tune of a $2 billion valuation. And it makes these humanoid robots. And I made the point with Tom Giles a little earlier, Romaine, and this is to your point about the supply chain conference. It makes sense that a person like Bezos would invest in this. I mean, imagine warehouses for Amazon filled with these rather than human beings. I mean, the company actually makes the point of saying, okay, we're Figure AI, and what we're investing in is the idea that there is a labor shortage that's happening, not just in the U.S., but throughout the world, and this is going to fill that gap.
What was interesting, though, too, and not to get too off track here, but some of the demonstrations I saw, they were talking about just how much more advanced the technology has gotten. And I remember Boston Dynamics gave me this presentation. They were talking about how in the old days, the robot could just basically stick its arm in there and pull something out. Now it can just open up the back of a truck or a container. It can sort of read basically the size of everything in there, determine the weight of everything in there, and then pull everything on or off in, I guess, an efficient manner, much more efficient than what Tim Senevic would be able to do.
Can they do gainers and decline? Can they do gainers and decliners? That's
Yeah.
what I want to know.
Tim, if they start doing that, we're all in trouble.
They definitely
We're in
can.
trouble when they can do gainers and decliners.
All right. Well, we're safe until all of this comes to fruition. Hey, guys, don't forget Berkshire annual report and also the shareholder letter from Warren Buffett. So that'll happen tomorrow. So don't forget.
Yeah.
So get up, get a cup of coffee, and read it tomorrow.
Are you going to you're going to have full coverage of that tomorrow? Bloomberg Radio and
At
television?
home with my puppies. Yep.
Okay.
I'll read it to them.
You and I both.
All right.
Are those
That's a wrap.
puppies Munger and Buffett? Is that what?
Not exactly.
Okay.
All right, guys. Have a safe weekend. That is a wrap. Our cross-platform radio, TV, YouTube, and Bloomberg Originals. We, of course, will see you same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Friday. Earnings season almost over in the U.S. One of the biggest, as you know, reporting this past week. We were just talking about it, Tim, with the TV guys. We're talking about NVIDIA, which had a big impact on trade and sentiment this week. No doubt about it.
That gave another big leg up to the record run in U.S. stocks, also impacting stocks around the world. Also this past week, Carol, we got minutes from the Fed's latest gathering in late January. What did it show? Any surprises? Most Fed officials remained more worried about the risk of cutting interest rates too soon rather than keeping them high for too long and damaging the U.S. economy.
And then we, of course, talked about the South Carolina Republican primary. That's tomorrow. So politics front and center for us, and really all of this for the team at Bloomberg Wall Street Week, hosted by and led by David Weston, who joins us in studio with a preview. Another busy week, a lot of things. Yeah. Top of mind for you. I know we like to ask this, but I do think about how you and the team, when you're doing a weekly, how you think about on Monday where you might be on Friday. And what you want
it's
to
hard
cover.
to know, isn't it, Carol, given what's going on? Well, pick up on a couple of things you just mentioned, actually. Certainly politics, as we're looking at an election coming up, and what ramifications that has. We have Eric Cantor on, who's the former House Majority Leader, Republican out of Virginia, now with Moelis, asking about what difference the election could make for his clients and for Wall Street. And talking about the fundamental shift he thinks that Donald Trump has made in his Republican Party, making it much more populist and really affecting particularly trade is something we talk about.
Is he nervous about,
it's
depending
funny,
on how it comes out?
You know, it's so funny. He spent a fair amount of time there. He knows it well.
Yeah.
He basically said, it was a version, I think, of, remember the Winston Churchill quote, the United States does the right thing after exploring all the alternatives? He basically said that about the House of Representatives. Whether it's keeping the government going, whether it's funding Ukraine, they're going to go through an awful lot of, I would say, mishigas.
Yeah.
But he thinks it'll come out all right in the end. And he says that, by the way, by and large, business is sort of just ignoring most of it because they're saying sooner or later they'll come to a sensible result. I hope he's right.
Wow.
You know what's so interesting about Eric Cantor is he was there until 2014. So the House of Representatives that exists today and the Republican Party that exists today is such a departure from what he experienced when he was in the House.
Well, and he, to some extent, is a symptom, as it were, of that.
Right.
Because remember, he lost in the primary to
It's
somebody
a
to
Tea
the
Party
right
person,
of him.
right?
To the right of him, exactly
Yeah.
right, to the right of him. And it was an early precursor of what we have seen happen, actually. It is such a different place. And in fact, he was written up as one of the people who's going to change everything when he came in. And the fact is, it all changed. It just didn't change the way he thought it was. He wasn't the one doing the changing. It was, he would say, Donald Trump.
So ultimately, when it comes to it, right, this is what you do, this is what we all try to do, that what is happening globally, what's happening in the U.S., we try to kind of whittle it down and what does it mean for the investing landscape. And you got into that with about distressed investing opportunities, right? Because even when there's some downside, that is opportunities for investors.
Yeah, that's exactly the word, actually, that Josh Friedman, who's the co-founder and co-CEO of Canyon Partners, used in talking about investment opportunities right now. Because we have, as you know, so much leverage that was taken onto so many different balance sheets, both public and private, when the interest rates were essentially zero, close to zero. Now they're up over 5. That creates what he would say was opportunities. And he talked about what that was. And one of the things I asked him was, okay, if the interest rates cause that, then if the interest rates go down again, does that affect your business? How sensitive are you? And I was surprised at what he had to say. This is what he had to say about whether the interest rates would really affect his business much.
It can, but not necessarily. And what I mean by that, we've been sort of in the higher for longer camp for a while on the theory that Jay Powell is a very bright guy, obviously, and he doesn't want to use every arrow in his quiver unnecessarily. And as long as the stock market is healthy and as long as unemployment remains very low, and as long as inflation looks like it's more or less under control, why should he rush and use the weapon of lowering short duration rates so dramatically, so quickly? So I think the market has really misread some of his signaling, and some of that might just be taking a victory lap because of the successes he's seen at taming inflation. My own view is the Fed's inflation numbers are artificially high. I think if you look at real housing costs and you talk to the people who own collectively hundreds of thousands of residential units across the country, even in the best markets, rents are basically flat. Most people aren't moving from their home because their mortgage is low, so their occupancy costs are flat. So to say inflation because of some metric that the Fed is using is 6%, and that's 30% of inflation, I think you're overstating inflation by as much as 1.8%.
Yeah, it's an interesting point of view. And I must say, we talked to somebody from Blackstone involved in real estate this week as well. We're going to have on next week. And he made exactly the same point. When they look at what they're doing, particularly with multifamily dwellings and things, he thinks that people are overestimating inflation right now rather than under. But to go back to his point about the need for a cut, listening to you all summarize the week, if you're Jay Powell, you're the Fed, and look at this, you don't see a lot of reason I have to cut rates because I've got
You're
the stock
your
market.
hair, as they say, because you're like, I kind of got this.
Yeah,
And why should
looks
I
like it
rush
right now.
Look at all the room he has to kind of make sure that inflation is certainly down and not going to kind of raise again at some point in the future.
Yeah, I mean, the financial conditions right now are not exactly tight if you look at the equity market. And that's just one measure. That's just one measure, I should say, of the equity market. There are financial conditions. What else is on the agenda for Wall Street Week?
The other one that I really like an awful lot is Paul Romer. He has a Nobel Prize for economics. He's at Boston College. And he came on to talk about two things, both of which somewhat surprised me. He has a whole theory about social media and what we need to do with social media, how he thinks it's an economics problem, not a behavior problem.
Go on.
He says
You got us.
It's very similar. He actually goes back to Wikipedia. The founder of Wikipedia decided not to take advertising, to do it as a subscription. When you're doing it on a subscription, you're actually serving the user of it, the viewer, rather than the advertiser. And he says where social media went wrong is they went all advertising and they went all data to figure out exactly who you are, and it fed the beast because they serve up some pretty controversial stuff because it makes more money on the advertising.
Is it an economic problem because of productivity, or is it an economic problem because of the incentives?
He thinks that we would take care of the behavior problems if we made it all subscription-based.
I agree. Like, think if you had to pay for everything to subscribe to, right? Just think about it. Just wouldn't be a free for all.
Well, by the way, to go back to the olden days when we had print, I remember meeting with the head of The Economist when I was running ABC News.
Yeah.
And he said the biggest problem with Time Magazine and Newsweek is it's advertiser supported. If you look at the magazine, they're doing most of the editorial to get advertisements rather than the viewers. We don't do that. We charge a lot for the magazine, and as a result, we're always deciding what does the reader want to read about rather than what does the advertiser want to advertise.
The content.
Yeah, exactly.
Ruled.
So yeah, and the other thing we talked about was trade, which I thought was equally interesting. He has a whole different theory on trade, not free trade, not protectionist. He said, keep the goods out, but let the ideas and the capital in. He said, keep
so is that human capital?
Like immigrants and...
Well, sure, immigrants, absolutely. But also just know-how.
Yeah.
And he said, like for Nippon Steel and U.S. Steel, Nippon wants to come in and employ U.S. workers and invest in U.S. Steel here and bring their know-how in. More power to them. But on the other hand, put the tariffs on so we preserve those jobs for the high school educated, which we lost.
Isn't it kind of what China did? Said, come on in, everybody. Like, help me set up a facility. You know, we'll put workers to work and look at what they were able to learn and really it kind of boost their economy so many different ways.
Yeah, by letting all the goods in, we essentially said to American companies, go produce your goods overseas where it's cheaper.
Right.
And we eliminated a lot of pretty high-paying jobs here. It's a theory. It's a different theory. But it's, as I say, neither free trade nor protectionist, somewhere in between.
All right. Sounds like a pretty good show.
Yeah, I'm excited about it, but thank you for having me to talk about it.
No, always appreciate it. And with everything that's going on, really fun to hear kind of how you guys approach it and go about it. So, all right, good stuff. David, thank you so much. David Weston, Wall Street Week, folks, coming your way in just about 40 minutes from now on Bloomberg Radio and Bloomberg TV.
I feel like there's something we could do. I'm back on the social media thing.
I am kind of blown away by that.
You know, kids.
But I almost want... David, 30 seconds. I mean, how do you go back, though, and change that model?
Yeah.
Did he give a prescription?
Paul, no, and he admits you can't just legislate and say you must only take subscription. But what you could do, he has two ideas. One is go after the data, because if you don't have the data, you're not going to have the advertisers give you as much money. If you don't know exactly who these people are, that Carol Master was the person and she does these other things, it cuts back on that. And the other thing he wants is a really progressive tax on advertising on online. So you have to pay more and more money the more and more advertising you do, and it makes it prohibitive.
There's a couple of political candidates who are running, and maybe you might want to hear his ideas. Good luck with
They don't want to touch that.
All right, David Weston, Wall Street Week, coming your way, as we said at the top of the hour, on radio and TV. Folks, you are listening and watching Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Do want to begin with a key ruling for the sports world. Moments ago, federal judge barred the NCAA from enforcing its rules prohibiting name, image, and likeness compensation from being used to recruit athletes, granting a request for a preliminary injunction from the states of Tennessee and Virginia, and dealing another blow to the association's ability to govern college sports. Stocks ended the day mixed, with the S&P 500 index at a record now at 5,088. little changed, up today by 1 point. Stocks did struggle to gain traction. Big tech lost steam after a powerful rally driven by the artificial intelligence euphoria. NASDAQ was down 44 points today, a drop there of 0.3%. Dow Jones Industrial Average up 62, a gain of 0.2%. S&P higher by 1 point to a record 5,088. 10-year at 4.24%. The 2-year 4.68%. Spot gold up 0.6%, 2,035 the ounce. And West Texas Intermediate crude down 2.6%, 76.55 for a barrel of WTI. Warner Brothers Discovery out with earnings that fell short of estimates. Warner Brothers content includes CNN, HBO, Food Network, and the Cartoon Network, among many others. Today, Warner Brothers was down 9.9%. Recapping, S&P higher today by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
So be my guest, you've got nothing to lose. Won't you let me take you on a sea cruise?
All right, everybody, and some news out of the cruise industry today. Viking Holdings filed confidentially for an initial public offering as the travel industry continues to rebound from its pandemic-era slump. Viking's listing could raise $500 million or more. Bloomberg News reporting that earlier today.
Our next guest knows quite a bit about the industry, and she actually didn't go to an Ivy League school, she writes in her new book. In fact, she describes herself in that book as, quote, floundering in her 20s, seemingly without direction. She did, though, go from selling cruises door to door to becoming the CEO of the company. That company we're talking about is Celebrity Cruises, the subsidiary of Royal Caribbean Group. All this, Carol, in a brand new book. It's called Making Waves, A Woman's Rise to the Top Using Smarts, Heart, and Courage.
Lisa Lutouf-Prolo is the author. She's also the vice chair of external affairs at Royal Caribbean, and as we said, former CEO of Celebrity Cruises. She joins us from Plantation, Florida. Lisa, so nice to have you here with us. We feel like there's a million ways to start with you. I hope you will indulge us a little bit because I have reported on Royal Caribbean. I've reported on some of your competitors.
I thought you were going to say that you're a sailor.
I am a sailor as well.
Yeah.
But it's been interesting to watch the cruise industry in general, pre-pandemic, make it through the pandemic, which was remarkable, and then come out and seemingly be stronger than ever. Talk to us about the cruise industry, the trajectory that we've seen over the last few years here of, okay, really tough times, and then coming out of those tough times and doing just okay, better than okay.
Yeah, well, you know better than me because you're reporting on us all the time and interviewing many of the executives there. And I think it's pretty well determined and known that, yeah, we're past those dark days and we're full steam ahead. The industry is doing great. I heard what you just said about Viking, and that's just another indication that it's a pretty robust industry right now.
Why do you think the industry is doing so well right now? What is it about cruising that really continues to attract people year after year?
I guess what I would say is that it's the same as all travel. People want to experience the world. They want to get out there. The industry is robust. It's growing. It's exciting. A lot of wonderful new ships out there. And the cruise industry is capitalizing on people's desire to experience things and travel. And people spent 2 years not being able to do that, and now they're coming back in earnest pretty much in all forms of travel, for sure.
Lisa, we got to ask, because in the beginning of your book, you say you never considered writing a book. It was the first thing from your mind, never thought you had an interesting enough story to tell, and yet, FYI, any woman who becomes a CEO is a story. And I can't wait for the day where it's not a story, because my whole trajectory in journalism, and it's several decades, like it has been a story. And so kudos to you for getting there. But what ultimately said, okay, I'm going to write this book?
Well, first of all, a couple of things, if I could, Carol. I agree with you. It will be wonderful when it's not a story anymore. And what was interesting is that when I was first appointed to the role back in December of 2014, it was such a big story, and I was overwhelmed by it. And what I say in the book is I was actually quite annoyed by it because I was getting a disproportionate amount of attention because I was a woman, not because I had worked 30 years and accomplished so much that actually got me into the position. But what I decided, and one of the reasons that I ended up writing the book was that so many people told me it was a big deal. And I decided at a certain point in time I was going to lean into that, and I was going to use this disproportionate voice that I had because I was a woman who made it to the CEO position to tell my story. And it's really a story about a young woman in my 20s who started at the bottom and ended up at the top, and it's really, if I can do it, you can do it story.
Well, I love that, right? And we do talk about often you start at the bottom. In media, often a lot of people do, whether you start as a production assistant bringing somebody coffee and you just work your tail off and you work your way up.
Yeah.
Having said that, Lisa, right, it was really easy to work your way up.
Are you being facetious, Carol?
I am.
Okay.
Take us back to the early days and getting into the industry and what it was like to be a woman in the industry 40 years ago. Any industry, I feel like even 40 years ago was kind of tough.
Sure. Well, you know, my career started in sales and marketing. So for 21 years, I was in a very gender neutral environment, didn't think a lot of it, never thought about being a woman or the fact that it was maybe something that wasn't working to my advantage, or there weren't a lot of us, because in sales and marketing, there are quite a few women, even in leadership roles. I realized there was a gender disparity in 2005 when I went into operations, because that's a very male-dominated part of our business. And again, our industry is old. You just said it yourself, Carol. It was 40 years ago. It's still very much predominantly men in operations, and clearly in the CEO roles and running these brands and companies, it's still predominantly men. I never felt like being a woman impacted my ability to grow or achieve what I achieved in my career. I did find it somewhat of an issue in some of the, I had 3 roles in our company where I was the first woman to ever do it. And I guess I would use the word skepticism when I was put into those roles. A lot of the men that were in those areas of the company were skeptical as to why I was there and if I belonged there. And I just had to build my credibility one interaction at a time.
Lisa, do you think your story is still possible in 2024? And the reason I ask is because it's so rare to find somebody who's been at one company for pretty much their entire career. And yes, you did start working at a very young age in your family business in the restaurant, but I'm wondering if you still see this of somebody starting at one company and then working their way completely to the top of that company, because so often the only way to actually get a promotion or get more money is to jump to another company when you get another offer.
Well, there's a lot of truth in that, Tim. I don't.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did rather all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
There are none of us around. I'm looking left and right. And maybe I, cut them more slack than they might have deserved. I didn't think about it that way. But what I decided to do when I met with that skepticism is just to turn it around. I come at everything from a very positive angle, and that's how I looked at that. I said, okay, I don't have subject matter expertise, but I guarantee you there's a lot of other reasons why I'm here, and I'm going to show you that in a very short period of time.
All right, Lisa, sit tight. We're going to come back, continue the conversation. We've got more time with Lisa Lutoff-Perlo. She is the author of a new book, Making Waves, A Woman's Rise to the Top Using Smarts, Heart, and Courage.
And just a little tease, we're going to start our next segment with the dark days of March 2020, especially for the cruise industry, because that's where the book opens.
I feel like, you go back there and just that moment of the unexpected of, we're going to shut down the global economy, folks. We're doing it, and we saw it. All right, right now, back to World and National News. Off to Nancy Lyons. She's in D.C. All yours, Nance.
Thanks, Carol. Tomorrow marks the second anniversary of Russia's invasion of Ukraine. Ukrainian Foreign Minister Dmitry Kuleba told ABC's Good Morning America his country is still holding out hope for more U.S. aid.
We have no doubts that there are votes in the Congress to support the appropriation, the supplemental bill, and provide Ukraine with further assistance. If it doesn't come, Ukraine will pay with human lives.
Kuleba also thanked Americans for the support they've already provided. As promised, the Biden administration today released a new package of sanctions against Russia. And former Supreme Allied Commander of NATO, James Stavridis, tells Bloomberg Surveillance these new sanctions target Russia's war machine.
Putin is a tough, long-range player, but his soldiers are dying in the hundreds of thousands. Hundreds of thousands of young men have departed the country, Russia, to avoid the draft. Long term, it's not a good hand of cards. We just need to keep our foot on the accelerator.
Admiral Stavridis is also a Bloomberg opinion columnist. The sanctions target more than 500 people and entities. A former FBI informant who was arrested last week for lying about President Biden and his son has been rearrested. Alexander Smirnov falsely told the FBI both President Biden and his son Hunter received $5 million each in bribes from Ukraine. Last week, he was charged with making false statements. A California judge decided that Smirnov is a flight risk and ordered him to be rearrested. The clock is now ticking for former President Trump to pay the penalties in his New York civil fraud case. The interest is accruing this afternoon in New York County's Supreme Court. The clerk signed and entered the judgment to start enforcement of penalties in the case. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
From Bloomberg World Headquarters, I'm Charlie Pellet. 440 right now on Wall Street. Turned out to be another record-setting day for the S&P 500 index. Up again today, up barely, up by 1 point, ending the day, ending the week, heading into the weekend at 5,088 on the S&P 500 index. Stocks did struggle to gain traction. Big tech lost steam after a powerful rally driven by the artificial intelligence euphoria. The Dow at a record up another 68 points, closing at 39,131, up by 0.2%. Losing day for the NASDAQ Composite Index. NASDAQ down 44 points, ending the week at 15,996, a drop today of about 0.3%. 10-year yield 4.24% with a 2-year 4.63%. Spot gold today a little change. We had gold up 56 cents the ounce to $2,035. West Texas Intermediate crude down 2.6%, 76.56 a barrel. So again, turned out to be a mixed day. As for the overall market backdrop, Caterina Simonetti is a private wealth advisor at Morgan Stanley Private Wealth Management, and she was a guest right here on Bloomberg Business Week.
What we're seeing now are these earnings surprises, and they're not just surprises across the board. They're surprises specifically in the names, the magnificent 7 names that have done so well. So now it's going to be progressively difficult for the Fed to be very aggressive with rate cuts, and consensus now is that we're going to have about 3 of them. And the focus for investors is really on these fast-moving stocks.
And again, recapping, stocks did advance today, at least the S&P 500 index up 1 point, little changed at 5,088. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, everybody. I want to get back to our guest. With us is Lisa Lutev-Perlo. She's the author of a new book, Making Waves, A Woman's Rise to the Top Using Smarts, Heart, and Courage. She's also Vice Chair of External Affairs at Royal Caribbean. She's the former CEO of Celebrity Cruises, which is, of course, a brand within the Royal Caribbean Group. And she is still with us from Plantation, Florida. So good to have you here. We want to talk a little bit about COVID. And
yeah, I mean, you found yourself at the helm of the company, Lisa, at a time that was incredibly challenging, to say the least. So take us back to March 8th, 2020, which is where your book opens. What happened then?
Well, March 8th of 2020 was actually a really exciting day for me. I boarded Celebrity Edge. We were celebrating International Women's Day, which is March 8th, actually. And we were celebrating a history-making, barrier-breaking event where 100% of our bridge on that ship was manned by women, and Captain Kate was at the helm. So it was a glorious event. We had worked really hard to improve our gender balance on our bridges. We were able to do this. Our guests were excited. Our team were excited. I left the ship on Wednesday, flew home, went back into the office on Thursday, left for the weekend on Friday, and then, as you know, very well know, we had a global shutdown that weekend and ceased operations for 15 months. So what I talk about in the first chapter of the book, Sailing Through the Storm, is I went from the highest of highs in my career to the lowest of lows within 72 hours, and I will never forget that.
I mean, yes. Like, I think about, for us, like, kind of going through the financial crisis and reporting on it, where I don't know, we just felt like the world probably felt this way, but the dark days of, oh my God, is this system going to come undone? How did you think about, like, you were feeling, like you said, from a high to a low, but you're like, I'm responsible for this brand and the people who are connected with it. We got to figure out a way forward. And you obviously have a corporate parent who was involved in it too, but just take us through, like, initially how dark it was and what you were thinking.
Well, I was thinking what all of us were thinking is this horrible thing that's impacted the world ever going to end? Are we ever going to see the light at the end of this tunnel? There were so many terrible things happening all at once, including our business shutting down. That was not the least of it, but it was just one of a global nightmare that we were all living through. And yes, our company played a very active role. I was only one of the executives dealing with it, but I did have to think about, as a leader, how am I going to pivot, and what are the things that I'm going to do that are going to get the 20,000 people that work under my area of responsibility through this? How am I going to give them hope? You know, how am I going to give them confidence that this is going to end and we're going to get back into business, and our crew members spread all over the world are going to be able to get back to work? And some days I didn't even know that. So I learned more as a leader during COVID than probably the other 37 or 38 years of my career in the company.
What are some of those things you could kind of impart on other people now that you learned in such a short time?
I think the most important thing that all of us as leaders need to understand is when we need to pivot and what we need to be doing and the muscle that we need to be building at any given time. I was a CEO of a brand within a corporate S&P 500 company. Shareholder value, returning shareholder value, transforming the financial performance of the brand was at the forefront of everything I did, how I led, what I thought about every single day. And when you're out of business, you have to think about different things, and you have to downplay those because there is no business to generate, but also you have to be able to switch yourself as a leader from a hard driving, results focused, driven, visionary, strategic thinker to, okay, let me give people what they need right now, which is empathy, which is support, which is compassion, and again, which is hope. And so I really think that some leaders have a really difficult time flexing their style and being different on any given day relative to what the circumstances present. And I learned that during COVID, and I learned that as soon as I was able to do that, the way the team was feeling and the way our employees all over the world was feeling immediately changed, because that's what they were looking to me for. I was that beacon for them, and I needed to remember that every single day when I woke up.
Well, we so appreciate that perspective, and we're going to take you back to the high point just before the pandemic, and you talked about the ship and the role of women and Captain Kate. Our Charlie Pellet is a big cruiser, including Celebrity Cruises, and he wanted to know, and we're going to ask you, do you follow Captain Kate on Instagram, and what has she done for your brand, and being able to put out a ship. She was the first time that an American woman was named captain of a mega cruise ship. So it was a big deal. What has that done for the brand?
Oh, Carol. Well, she was the first and still only, I might add, American woman to ever be at the helm of a mega cruise ship. She was the captain on Celebrity Edge, which, by the way, was the first ship to set sail out of a U.S. port post-pandemic. January 26, 2021, Captain Kate was at the helm of Celebrity Edge, and we were the first brand to go back into service. She was the first woman to take a ship out of the shipyard in Saint-Nazaire, France. I would follow Captain Kate everywhere, and I follow her on Instagram. And when you think about the things that you're proudest of in your career, appointing her and giving her that opportunity as captain is one of the highlights for me and for her. And she is beloved. She's beloved by her crew, her guests, everybody that encounters her. She's an unbelievable navigator. She's extraordinary in every single way. And she's been a great advocate for Celebrity, and she's been a great advocate for women mariners and recruiting them into our company.
Hear, hear. I love it. I'm a sailor. I'm the navigator.
Yeah, I was going to say, Lisa,
boat.
can you tell that Carol spends a good portion of the summer on the high seas? She really does.
I love that, Carol. I love that. Thank you.
You're welcome. You're welcome. All right, so we want to do kind of a little bit of a rapid fire round with you if we can. We've got about a minute and a half left. Just quick answers. Okay. Work from home, yes or no, or how you feel about it? You can be honest. Be honest.
Mixed and both. Mixed and both. How about that?
Mixed and both.
Yeah, both. Work from home, don't work from home. And I feel mixed. Pros and cons.
Okay, so talk a little bit about your favorite place to cruise.
Quickly.
Alaska.
Wow.
That's a good one.
Really?
Or the Galapagos. Anywhere where nature plays a huge role.
All right. Leader you admire. Doesn't have you can excuse your current leaders because we don't want to put that on you.
No. Leader Ruth Bader Ginsburg.
Because, real quickly.
Oh my gosh, what she did for everybody, herself, women.
Yeah.
Everybody.
Getcha. Hear ya.
Next act.
Next act.
Yeah.
Or next port. Let's stay with the sailing metaphor. I just got about 25 seconds.
Okay, next chapter. You're going to have to re-interview me at the beginning of May, and I can tell you.
All right.
We will
like
do
it.
Make
See,
some
look
time
at
for
that
us.
deep tease. Look at that. We'll add it to the calendar.
Oh, yeah. I'm not done yet, folks.
All right, Lisa, so appreciate this. Have a great weekend. Lisa Lutoff-Perot, she is the author of a new memoir, Making Waves, A Woman's Rise to the Top Using Smarts, Heart, and Courage. I love it. Love it, love it, love it. She's cool.
Very cool.
We're going to check in with her. Lisa
May.
Lutoff-Perot.
Add it to the calendar.
Yeah. There's going to be more.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Rivian Automotive lower by 12% today after UBS cut its recommendation to sell from buy. It also slashed the share price target by 2/3 on a view that a changing electric vehicle backdrop will make it harder for the auto company to ramp up profitability. Again, Rivian lowered today by 12%. That's on top of yesterday's 25.6% swoon. GM's Cruise autonomous driving unit is nearing the resumption of robo-taxi testing in coming weeks. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, sources are telling Bloomberg that Houston and Dallas are emerging as potential locations for all this. That follows the grounding of its fleet last year. And the sources say the Cruise unit is in talks with officials in several metro areas, including those two Texas cities, about resuming tests on public roads with safety drivers. Before suspending operations over safety concerns in October, the company had hundreds of cars in San Francisco and smaller numbers in Austin, Houston, and Phoenix. And the robo-taxi company has been working to earn the public's confidence after one of its cars struck and dragged a pedestrian in San Francisco back in October. That sparked allegations from regulators that Cruise withheld key footage and details of this incident. Charlie.
And that's Denise Pellegrini reporting. Sticking with an automotive theme, Carvana topped Wall Street's profit expectations in the final months of 2023 and said it expects improved earnings this quarter, sending its shares up the most in 7 months as the used car retailer defies the challenges of high interest rates and inflation. Today we saw Carvana shares surging by 32.1%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. It is Friday afternoon, and yes, Carol?
You want to do some world and national news?
I do want to do some world and national
right.
news.
Just
Let's do
checking.
that, and let's get to Washington, D.C., because Nancy Lyons is standing by in the D.C. newsroom. Hey, Nance.
I'm here. The Biden administration is taking new action against Russia to mark the second anniversary of the invasion of Ukraine, which is tomorrow. The sanctions target hundreds of entities in more than a half a dozen countries, most of them accused of helping Russia's military. During a news conference today in Argentina, Secretary of State Antony Blinken said the sanctions are also a response to Russian opposition leader Alexei Navalny's death.
What I heard and saw when so many countries of the world were together, both in Munich recently, but also at the G20 in Brazil, was outrage at what Russia had done to Mr. Navalny.
Blinken says it's hoped that with these new sanctions, Russia will have difficulty modernizing its industries because the technology will now be out of reach. Senate Majority Leader Chuck Schumer is in Ukraine looking to assure President Volodymyr Zelensky that more U.S. aid is coming. A $60 billion package, though, is tied to funds for Israel and Taiwan, is stalled on Capitol Hill. Bloomberg government Zach Cohen reports this overseas trip could add new urgency to the debate.
The fact that Schumer would leave the United States for this trip is another good indication that Democrats are looking to ensure not just Ukraine, but also allies in Europe, that there are forces in the U.S. who want to support Kyiv in its fight.
Bloomberg government Zach Cohen. The South Carolina primary is tomorrow. It looks like Donald Trump has an easy path to victory over former South Carolina Governor Nikki Haley. Bloomberg White House politics reporter Christian Hall is in the Palmetto State.
It is amazing how Donald Trump came into the GOP and basically made it his own. And a lot of the establishment figures are now, backing Donald Trump.
Christian Hall speaking with Bloomberg's Balance of Power. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons in D.C. All right, folks, we are getting ready certainly to wrap up here on Bloomberg Business Week for the week. Don't forget, though, we've got our weekend show and podcast, weekend broadcast, 8 a.m. on Bloomberg Radio. And some great stuff, including a fun dive. I'm just going to go right to the fun stuff. Bloomberg Pursuit.
Go for it.
Catching up with Chris Rouser and Brendan Presser. Because Brandon, once again, going undercover. You might remember he did it at one of the Disney parks. He's done it at a really high-end spa.
Did he do it on a ship?
I think he might have done it on a ship. I have to remember. But he goes to kind of all these high-end luxe places and finds out what it's like to cater and take care of the rich, the wealthy, the celebrities. And anyway, he did it at
Raffles
in Singapore, which is like no other.
So
he was a butler. He was a butler for
It's pretty amazing.
a while.
They are catering to the wealthiest of the wealthy, especially the Asian consumer who it's like you hear about a $20,000 Birkin bag.
Yeah.
They have $200,000 bags.
Yeah, exactly. And
like everything's 10x.
Right, exactly. It's also sometimes getting a celebrity, making sure that the bathroom is stocked with pink toilet paper. So anyway, little teaser, lots of other stuff. We also get into NVIDIA earnings and the elections and the changing demographic trends around the country when it comes to swing states. Having said that, we have a great story you just want to end on.
So you sent me this story. I sent you this story at the exact same time this morning. And it's about a new study that from Ladders that says if you want a job that earns more than $200,000 a year,